Hello, I'd like to share with you some context for the Euro futures from Thursday the 21st of November. Now, the Euro had been in an orderly upward trend. You can see this trend line was very clear, several touches, several close touches, and that has been going on since the low was made on the 7th of November, and that was the ECB day when they cut. And often what you see is when the market is moving up in such a way, or it's conforming to a trend line very clearly, when there's a break, the break can be fairly pronounced. So given this fact, I do like to draw Fibonacci retracements on these kind of moves to gauge any retracement if and when it does happen. Now, on the Wednesday, which was the 20th, what you saw is that there was a lot of talk about this and about that. There was talk of Fed taper and negative rates from the ECB, and the market broke. So it broke this trend line, and the move was pronounced. And given this type of technical and fundamental backdrop, you can pretty much assume that there's likely to be some kind of follow through from the market. Participants are going to want to sell it to see if it's going to go any further. Just to note here whether the 61.8% retracement is of the entire upward move. That's coming in at 134.04, and that's pretty close to the 134 even number, which really has the potential to act as support. It's not been fantastic over the last few weeks, but a big round number, especially when the market's approaching it fast, has got the potential to cause some kind of reaction from participants. So with that in mind, what I want to do is show you a closer picture, and this is a 233 tick chart with trend jumper on it. And you can see that this was the fairly consistent move down as well. There were few pullbacks when it actually started. It was a pretty decent move. Finally it made the low later on in the session, and that was coming in at 134.14. And it's important to recognize what the market's first point of reference is going to be is how far did it get yesterday? How low did it get yesterday? And that's going to be the first price that it wants to break. And if it can't break and hold that, then that's an important piece of information to say how weak it possibly is. So I'm just going to zoom in here, make it a bit clearer. And I've marked up a zone between 134.05 and 133.98, which covers that zone between 134 even and 134.04, 61.8% retracement. I'll just show you that. So that's marked up there, and it's not saying that it's going to hold, and the likelihood is probably it's not. By rights it probably shouldn't. With that kind of move down, any break being this close, it should take it out. However, you've always got to be aware and alert to the fact that it might not happen, and what does that mean in those circumstances when it doesn't happen. And this is pretty much exactly what happened yesterday. And so if I scroll forward, you can see that soon, fairly soon into the next day, the next session, should I say, and there was a retest of that low at 134.14, but into the following day it did break it, and it broke it pretty well. You see the bars there. It's trying to take that out. It's trying to move lower. They are big down bars for a 233 tick chart, and it comes into this zone and it takes an initial bounce, and that low there is 134.03, so it gets through that 61.8% by a tick, and then it goes down and it gets right to 134 even. It tests it again, and it sits there for a little while, trading. But then what happens is, in the face of all the Fed talk, the ECB talk, the trendline break, the big down day yesterday, the fact that we've got through that prior day low at 134.14, the fact that we've not got that far through, that the low currently is 134 even from 134.14. That's 14 prices, not that much. It slams its way back up. And what that should be saying is, well, hang on a second, what is the reason for the market to do this, considering everything that I know? And as a very clear indication for you that perhaps the market might be ripe for at least some kind of retracement, and in fact that is indeed what happened for the rest of the day. There was a decent move higher, decent retracement here, and I think that we got through to about 80. I'll just scroll forward here, and later on there was a little help from Mario Draghi, the ECB president, but the move had been set into action before he even was talking. So see that there it got to 78. And with this kind of context, with the understanding that how the market might be moving, what could happen, what the probabilities are, you can avoid taking trades against the will of the market, if you like, and hopefully take those trades that go with it. Thanks for watching.